Good evening. Today I want to talk about some of the IPOs that have come and some high flying companies which are there in the stock market today. This year was a year of lot of IPOs, the year that has just gone by. Lot of platform companies which have not made profits and are not going to make profits in the near future. Even their future cash flows are looking negative. These companies are commanding huge valuations. We don't know how these valuations are being calculated. In the new age IPOs, of the four which are now in consideration, Paytm is showing a huge loss. It is almost at a loss of 40%. And some brokerages are now saying another 20% price drop is possible. I believe that is quite possible because when interest rates go up in America, money will go out of the stocks. As of today, the market is being held out by retail investors, mutual funds, and the LIC because the government wants to have a big LIC IPO. Second, Policy Bazaar, which is supposed to do extraordinarily well in insurance, but is making huge losses, also is trading negative. The IPO price was 980 and is trading at 965 today, though it's not a huge negative, but the company is not expected to make money anytime soon. Nika, which was Falguni Nayar's company, which is of course making profits, but its profits is equal to 3 days' profits. However, its total profits is the 3 day profit of ITC. This company going to grow and become bigger than ITC in the next 5 years? I don't think so. The forward guidance is also not very attractive. In fact, first quarter after the IPO, profits dramatically dropped. But this company is trading at nearly 80% to premium to its issue price of 1125. It's now trading at 2114. Then there is of course our Zomato, which had an IPO at 76 rupees and is trading at 138 rupees, a gain of 80%. Why are these stocks so high? I'm sure you are following the news and you have been looking at the founder of Bharat PE, who has now recently got a license to start a bank by taking over Punjab Maharashtra Cooperative Bank. He recently launched a verbal volley against Kotak Mahindra Bank because in his account and his wife's account, he wanted to invest 250 crores each in the Nika IPO. In that, he would have had to put only 20% margin. That is, he would have put 50 crores in his account and 50 crores in his wife's account, and the bank would have funded 200 crores each for a short-term IPO. And these kind of huge net worth get definitive allotment. So, in fact, he abused the manager, saying that they did not tell him in time. He could have gone to another place and got the allotment, and they would have got huge money on the day it listed. So basically, this IPO is today a game of liquidity where high net worth individuals are leveraging their existing equity nearly 4 to 5 times and playing casino. Sometimes it pays off like it did in Zomato and Nika, and the way it failed in PB Tech and 197. It's a game of lottery, and because there is so much liquidity sloshing around, banks like Kotak Mahindra are now financing these IPOs. But if these, what the justification techies tell is that these guys are disruptors and they will disrupt it. If these people are to believe, there will be no restaurants and all of us will be eating from Swiggy and Zomato. Now let us look at what happened in recent times to one such disruptor. Zoom was a business calling software which was going nowhere and was trading at $67.28 before the COVID pandemic. When the pandemic hit, everybody thought Zoom's profits are going to zoom, and therefore it went up to $568.3 on the 19th of November 2020. Microsoft launched Teams and Google launched its own product, and very soon the established old order hit back. And though Zoom is still a market leader, the price corrected from a high of 569.34. It is today trading at a price of 184.26. So much for it to be touted as a great investment. Anybody who bought 60 at 67 and sold it at a price higher than 185 has made some money. But if you are greedy and you are holding on to it, then you would have suffered huge losses. This is because Zoom was a disruptor who got disrupted. Similarly, Policy Bazaar is no rocket science. It's basically generating inquiry and putting salespeople to close orders. Without sales and marketing business, you cannot manage to do this kind of volumes. And Policy Bazaar has no intrinsic advantage over any other insurance broker. He is only an insurance broker who claims to use technology and get his lead from technology. Unless he does in sales and marketing expenses, he is not going to get huge sales. And that result was immediate as soon as the first quarter results after the IPO came. So, that is definitely going to be a disruption. Mint carried a series of articles on Zomato in which it said Deepinder Huda, instead of concentrating and investing in his own business, is busy investing in graphers and saying it will be a challenge to Swiggy and other Insta grocery delivery market. The truth is, these people have no idea how to make their business profitable. I am reminded of Ola, which launched electric scooters with a big bang and claims to have delivered 4,000 scooters in its first month of delivery. But when you check with Vahan, the government website, only 400 Ola scooters have been registered. There's a huge gap between promise and delivery. His existing business has not stabilized, and there is no hope they will make profits. And there are some high price stocks which have triple digit P by E ratios. Whatever happens next year is not going to be great for them. The entire Adani group is riding high this year because of its closeness to the ruling party. All the businesses are linked to government control, be it airport, electricity, or port. Very little of Adani's business is business to consumer. So if an unfriendly government comes to power or there is a market census, it is going to happen, then the prices of Adani's will start to crack. It has huge debt and will find it very difficult to service debt. Two other stocks in this list are the Avenue Supermarket and Trent. Both have got very low revenues because the COVID has made sure their business was completely shut. Because they are very strong promoters and very low debt, the market gave them extraordinary valuations with trailing PE of 222.66 in case of Avenue and 544.41 in case of Trent. Neither of them, even if they achieve their target, are going to have reasonable PE ratios soon. This means that the market will teach these investors who invested in these stocks at a very high price in a lesson. Then, what kind of high PE stocks should we look at? We should look at stocks like Airtel, which is now trading at a very high P by E ratio because the profits were affected by government action. In the coming years, if you would have bought it at this price, or before the news came from that the government is going to bail out these telecom players, you would have made a lot of money. And even when the price normalizes and profits return to normalcy, there is not going to be a major drop in prices. But these are few and far too fine, and no retail investor can discover this. It becomes a lottery. It is better to stick to fundamentals and to do investing in index rather than trying to burn your fingers by gambling. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.
For hot financial news reviews and economical updates, watch Be Rich. Please don't forget to like, share and subscribe our channel.